The following podcast is recorded and produced by Emerge, a media creators co-op.
Banks is, what is the role of tokenization and digitization? How quickly should they think about digitizing their own currency? What does that mean for the role of the dollar? If every currency digitizes and we have what does that mean for bank payments? What does that mean for the payment companies like MasterCard and Visa? All these are being questioned right now. I think we spend so much time talking about AI. We're not spending enough time talking about how quickly we're going to tokenize every financial asset and the opportunity we're going to have a digital wallet and moving ETFs and other things through a digital wallet. And I think that's going to happen worldwide very rapidly. And I think most countries are ill prepared for that and underappreciate how technology is changing that, not unlike how technology is changing AI and other things. It will be changing the technology around the plumbing of finance. I would say the biggest question.
Welcome to the Defion Productions podcast. I'm your host, the hardest working nobody in Bitcoin, Don. This is the 17th of August. We are 2 days removed from the 55th anniversary. Oh, look at that. That's what you get when you're filming live. We are 2 days away from the 55th anniversary of coming off the gold standard when Richard Nixon temporarily suspended the convertibility of gold. And here we are 55 years later, and our temporary order is still in place. Lots of chaos has ensued since then. Our economy has a lot of pig lipstick on it, makes it look like things are going good. Those of us that pay attention know that things are spiraling out of control, regardless of what the government will tell us and what earnings reports say and what the S&P 500 and the stock market tells us. Those that know where to look know that things are not going well. This podcast keeps it 100, keeps it real. We're very bullish on Bitcoin, very bearish on Bitcoin content creation. I've spent less and less time on spaces, spent less and less time consuming content by other Bitcoin creators because, frankly, I'm significantly disappointed with what I see. I do not think the content right now has been enjoyable. I think there's a lot more bickering, complaining, arguing, people saying what they think Bitcoin should be instead of the true ethos of Bitcoin being whatever it should be to anybody and full participation. Anybody can believe what they want, feel what they want. Bitcoin is freedom money. People are free to think and feel what they want. But apparently, most Bitcoiners haven't got that memo. You're supposed to believe what they believe. You're supposed to think what they think. People say freedom, but they don't really believe in it. And it's got me kind of just almost ready to wash my hands with consuming other people's content because I think overwhelmingly it's just trash. The whole BIP 110 thing that happened last week and just leading up to that has created another civil war. I would argue worse than the 2017 block size wars. I've seen a lot of people that I really respect in this space kind of go off the deep handle. I've seen others who I really couldn't care for in the space say some things that I actually agree with. So it's just things are kind of upside down right now. I'm going to keep it on just talking about things I see going on in finance and things going on in Bitcoin. I'll give you some of my opinions, but again, at the end of the day, they're just opinions. I don't hold a monopoly on truth. I'll tell you when I'm thinking what I think, and I'll tell you what I believe to be fact. And here we go. Let's jump in. Here it is, the first post we got here, which was the lead-in. The U.S. dollar has been backed by nothing for exactly 55 years. That is fact. That's not fiction. That's not an opinion. After a temporary move that was never reversed, President Nixon cut the dollar's link to gold in August of 1971. That was August 15th of 1971, calling the suspension temporary in his own address. The temporary fix became the entire global financial system, with gold rising from $35 an ounce that day to about $4,383 today. I think earlier today I saw it get up to 4,400. I'm not really sure where it's at currently, but yeah, I mean $35 to 4,300. That's a what 125x. Priced in the fiat dollars. Gold is doing pretty damn good. And here we are with this new asset, relatively new asset, Bitcoin, created in 2009, sitting at about 64K, off about 50%. Its all-time high, but millions of percentage points up from where it started. Jeff Ross, who I still respect, he has a lot of good content, tweeted this earlier. Remember that government deficit eventually leads to currency debasement. Said another way, when governments can constantly borrow and spend beyond their means, the users of its currency, in this case the US dollar, pick up the tab via inflation. And here's a tweet from the 16th, which was yesterday, from Hedgeye. US deficit surges plus 48% year over year to a record 432 billion. US budget deficit means greater debt issuance. And then here's a chart. I remain bullish on Bitcoin as long as the United States operates a fiat-based currency, which seems to not be changing anytime soon. So as long as that continues to be the case, I continue to believe in Bitcoin. Until that changes, I believe that Bitcoin is a great place to store your long-term value. Again, in the short term, in the last 10 months, we're down 50%, like I said, but we've had multiple times in the last 17, 18 years of this history of this asset where we've seen big declines and then it only to turn around and move past its former all-time high. If your time horizon is short, this ain't an asset for you. Newsflash, investing isn't for you if your time horizon is short. So I don't care where you put your money, but if you look in terms of weeks or months, you're not going to make it. I choose Bitcoin. I choose long-term. So, Bitcoin works for me. I don't know what to tell you. Next article here, not article, but here's Peter Schiff, who I most of the time don't agree with what he says, but his overall thesis of the U.S. dollar and our economy, I tend to agree with. And here is a clip from Peter Schiff talking about the U.S. on the verge of a financial dollar and sovereign debt crisis. He says the economy is in far more trouble than most people realize, which I tend to agree with, which is why I'm going to share this clip. So let's take a look at this Peter Schiff clip.
But in the long run, the fundamentals are going to ultimately bring the market back down. And so you have to be prepared for that. The U.S. economy is in a lot of trouble, much more than is generally perceived. I think we're on the verge of not just a financial crisis, but a U.S. dollar and sovereign debt crisis. So I think U.S. stocks, which are extremely expensive by any conventional way to measure stock value, even the bulls will concede that they're expensive. They just expect them to stay expensive. But there's a lot of risk that when you're priced for perfection, you're not going to get it. But
so 2008, great financial crisis is 18 years ago at this point. Somebody born during the financial crisis is graduating high school this year. That's how long ago it was. And I think, at least from what I view on social media, there is a growing segment of consumers, investors, whatever you want to call it, who don't understand that for the vast majority of investing history, there were bull markets and bear markets for the stock market. That has completely changed since 2008. Outside of a little hiccup in 2019, a 2-month quote-unquote bear market in 2020, and whatever happened in 2022, we've been on a perpetual bull market since the great financial crisis, when the money printers went full blast and we're just printing our faces off, and the stock market basically just goes up. Its number go up for the stock market, and that's about it. In the past, typically every 7 years, you would get a bull market, and then you get a little bit of a bear market, and then it would rinse and repeat. And there was even, I believe, Rich, you might correct me if I'm wrong. There was a phase from the Great Depression until the 50s of like almost 15 or 20 years where the stock market was actually flat. It didn't even do anything. It had that big dip in the Great Depression, and it didn't really rebound until the 50s when you get that baby boomer generation, and things kind of like started to do their boom and bust cycles from the 50s until 2008. But relatively speaking, I think there's a lot of people out there now that don't understand, recognize, or realize that the stock market's not supposed to just go up forever. I don't know. What do you think, Rich? Like, what are your thoughts on that? I mean, you're old enough to remember that the stock market actually had. No, I know, but you remember like '87. You remember like the '90s, like the dot-com bubble.
I pay attention more in the '90s. I think the first time I really started paying attention to finance is when I started investing, when I got my first real job, and at that point, I was kind of paying attention, and then right after that was the dot-com big thing. You're right. I mean, if you look at the stock market since about 1900, obviously it went up a lot in the 20s, which probably led to the big crash of 29. And then it obviously was down terrible. And then after the war, it kind of balanced itself out, and without really much in the way of inflation, and like house prices, car prices, everything pretty much stayed the same for like 20 years. And then guess when it all started to go up? Well, the anniversary is today. Like when we no longer had safeguards on the financial budget of the United States, that's when national debt really started to grow, all that stuff. So yeah, I mean, like, I agree. I think that there is this opinion that the stock market,
millennials for sure,
right? Because they only know it ever going.
Yeah,
up.
Millennials definitely don't know what it feels like to experience a real stock bear. Not a like I said, 2019 there was a little bit of a hiccup when Powell was messing with the rates a little bit. You had the COVID crash, which everything dropped 50%, but everything dropped at that point.
Everything.
And then 2022, you had not even a full year of stocks dropping, and then they by 23 they're back at all-time highs again. So you didn't even get a real extended bear market. So millennials have not really experienced, at least in their working years, a real legitimate. They think the stock market just goes up forever. I mean, am I wrong? Like, is that?
And again, the problem that it is that a lot of your stocks are not going up. A lot of them are flat.
But you're right. But we have so many indexes and ETFs that are created now that bunch everything together. Right. It's almost like and I think I said this before. And again, I'm not a stock trader. I don't even really invest in the stock market really at all. But it feels like the philosophy that they used with the CDOs in bunching all the shitty mortgages with the good mortgages and putting all that shit together is kind of like what they've done with these ETFs and these index funds is, you're mixing everything together, and it's like the S&P 500 is basically the Mag 7 or the Mag 8, whatever you got, which is just carrying everything up while you got these 400 and change other shit stocks that aren't really doing anything. And it looks like the index is really successful when if you took out those 8 stocks, it's not even beating inflation. It's not beating inflation.
Agreed. I mean, I think there was a lot of people that used to try to be stockbrokers on their own, like individuals, just run their life as stockbrokers, and then 2008 they all had to go back and find jobs. And then you have this kind of thing now where people are using stocks and crypto and different things, ETFs and all that stuff, to try to like that's their job. Like they're self-employed, and and you know, and it can work if, I guess, if you're really smart and you really know what you're doing. But I think a lot of people are just having a lot of success because the market just keeps going up. So they think they're geniuses. It's like similar to the housing market, you know, in whenever that 2008, when everybody kind of felt like, oh, my house, I bought my house for 50 grand. Now it's like 300,000. I'm a genius. I'm like, no, you're about to be in trouble because your house is about to crash back to, and you're paying a mortgage on a house that, you know, people thought they were managing assets, and they thought they were geniuses, and they didn't really understand it was over, and it's fake. And that's the problem right now. I think, like you mentioned, that these funds, you barely know what the stock, unless you're really, really into it, you barely even know what stocks you should be looking at, because you got a guy doing it. You hear from him once a year when he mails you a calendar, and that's, you know, that's really all. That's all it is. Like you're not really you're not talking to the guy on a regular basis unless you have a managed portfolio.
Yep, good point. I'm going to show a clip from an individual who is no longer on X. Unfortunately, he got sick of Bitcoin X, I guess, before I got the memo. Greg Foss, he's a Canadian. He's here on being interviewed on Simply Bitcoin, and he's talking about the debt spiral. And it's a 4-minute clip, a little over 4 minutes. It's really, really good, and I think it's worth sharing. So let's take a look at this clip.
As long as people continue to accept newly printed money as payment for their old money, the system continues. So I like to say that the printing quantitative easing infinity is the error term that solves the debt spiral. Like, the debt spiral can go forever as long as people accept their debasing currency as payment for the maturing debt. Okay. And by the way, James is totally right. But when you're running an 8% annual fiscal deficit, 8% of GDP is being added each year because that's the fiscal deficit, because you're not bringing in enough revenues. Not only are those old bonds being refinanced with new bonds, 8% is being added to the deficit because the government has more expenditures than it has revenues annually. So that means the debt itself will just, without compound interest, will double in less than 8 years, okay? Or 10 years rather, 8% in 10 years. So look, fiat printing is the error term that solves the debt spiral. But it's always been the error term that solves the debt spiral. That is how fiat Ponzi economics works. And it works for a long time in countries like the USA, but in countries like Venezuela, people eventually go, no more, or no mas. No. I don't accept it anymore. And I throw the currency to the corner because it's not worth anything, to the curb.
Nico, bring up the usdebtclock.org.
Oh, you got it.
And scroll down to the bottom. This is the part that Greg likes the best.
You see the top right hand, the top left hand side, that's your total national debt right there, 32 trillion, right? 32.5 trillion. It was just 32 trillion. We put on $500 billion in a couple of months here.
A couple weeks, yeah.
Okay, so that's 32 trillion. It will be 50 trillion by the year 2033, by the way. Okay, so that's only mathematics. But here's the cool thing. Go down to the bottom right-hand corner, Nico. Okay, now expand that. That U.S. unfunded liabilities, that's the real number, people. $192 trillion that people are counting on for Social Security, Medicare, and Medicaid. And they may get it, but the only way they're getting it, I hate to tell you people, is they're going to have to print it, which means the value of each dollar is going to continue to debase.
Gen X will get it, but it's not going to be worth anything. Yeah.
And it's not, they may not get it because sometime the money printer may break or the world will not take that money anymore. But let's assume it does. Fiat debasement is 100% certain. So let's not complicate things. If you know something is 100% certain, How do you protect against it? You own hard assets. So real estate, gold, oil, commodities, we mentioned that. But what's the best one? It's called Bitcoin. It's 6 p.m. Eastern Canadian time right now. I need to run to a dinner. I'll let James summarize the simplicity of grade 11 math for you, but I think you get the picture. This is the simplest trade or investment I've ever seen in my life. And if you own zero, go become an actor, work on some stupid fucking show, and then go on CNBC and look like a total retread when they say, oh, I only had to read 20 pages of the Fiat Standard to understand why Bitcoin matters. And that fucking loser, well, it's called scarcity. And scarcity, he doesn't even understand the difference between Bitcoin and crypto, okay? Ben McKenzie, learn fucking mathematics, okay?
While he was talking, I looked it up. So let me get it up on screen here. Let's do a U.S. debt clock, because that obviously that video is old. That was 32 trillion. We're almost at 40. We're a shade under. We are. Is it up? Yep, it's up. See, we're like look 39.923. So we're almost there. Almost at 40. And that video was about a year and some change ago. 7 trillion. Maybe almost 2 years ago. So 7 trillion back then. And I wanted to find that number on the screen. Total unfunded liabilities.
There's a lot of the right-hand corner.
Is it the right-hand corner?
Down, yeah.
I
think it's.
I don't see it. Right-hand corner?
Zoom in down here, down at the bottom right.
That's total cartel asset liability I see there. I don't see it where I don't know if it's on here because I was trying to find it and I didn't see it.
Is it there to the left? Right at the bottom left-hand corner?
U.S. trade deficit. Debt held by foreign countries.
Yeah, I don't know.
Look at that. And we could talk about that because people are always like, oh, we owe all this money to these other countries. We do owe a lot, but 39 trillion in the debt held by foreign countries is only 9 trillion of that.
Right.
30 trillion of that is here in-house. Right. That's the money printing. U.S. total debt, 114 trillion. U.S. total interest, 7 trillion. Credit card debt, 1.3 trillion. It's an average of 8,363 per person. Defense spending reaching close to $1 trillion. Social Security, 1.6 trillion. Medicare, almost 2 trillion. Like our interest on our debt is basically at another line. Like it's more than Medicare, Medicaid, and Social Security. It's over 2 trillion. Federal revenue, 5.5 trillion. Just it's
Well, the illusion is when he was running for office, he said he was going to get rid of the debt in what 8 years or whatever he said, and
yeah,
regardless of the number, and he's added more than any president since he was in there the last time, and he sells it to you saying that we're going to get all this money coming in because I'm going to cut taxes on this, and I'm going to cut taxes on this, and I'm going to, we're going to stop this, and we're going to do these tariffs and all these things, which everybody believes, which I don't think he believes it. I think it was all a scam. And if you don't believe it's a scam, like they just said he could have his own bank. So, I mean, he got approved to basically be his own crypto bank now. And it's just like, but we believe things, and I'm not even sure how you fix it at this point. there's so many things that I don't think that would have to be done, and I don't think we have any politicians that are strong enough, or a party that's strong enough to actually do those things, even if they got into office.
Money growth since 1913, 1,417.32x. Wage growth since 1913, 124x. Significantly less.
And I'm sure you're on social media a lot too, and it's, all the people that are posting these stories about, like that I bought my first house and all that stuff, and it's like, again, go and compare everything that you had to do, that you did back then, and how much it cost. And you can argue that, well, we shouldn't have to spend all this money on cell phones and apps and all these other things. You're right. Then don't. But I don't know how you're successful without a lot of those things. They're like your house used to have utilities. I think like a cell phone and those things have become almost like a utility. Like you kind of, you're going to have a cell phone bill forever. It's just what it is. Like, whether you're paying for a new one or you're, paying for service, or, your internet, Wi-Fi, whatever it is, like they're inherent costs. When I think about the costs I have to running my business, I think about the fact that I have gas, I have electric, I have insurance, and I have what we're doing right now. I have to be able to live stream. I have to have really good internet. Like I pay more for my internet than I do on some other things. Things are more expensive now, and there are things that we have to do that also that take away from that disposable income that people once had.
I found the information. I think I found a better picture too than they put on that video. So U.S. unfunded liabilities, total unfunded liabilities, 86.6 trillion. That's the number that's left over from the debt. So if you go down here, the full gap is, the full fiscal gap is 126.53 trillion. The debt 39.93, unfunded liabilities at 86.6. So the true debt is 126.53. So the breakdown, 24.9 trillion Social Security unfunded, 48.3 Medicare unfunded, federal and employee pensions 8.2 trillion, state and local pensions 5.2 trillion unfunded.
So what does that mean? Does that mean over what percentage of the budget?
Unfunded liabilities represent the difference between what the federal government has promised to pay in future benefits and what it expects to collect in revenue to cover those promises.
Got it.
So the future amount of pensions that they're going to owe, the future amount of Medicare, like it just shows that the debt is going to continue to spiral, which we showed a video on, debt spiral. Like this problem is going nowhere. We have and this is the point that I'm trying to drive home. This is why I'm like bullish on Bitcoin as I possibly can be, and hard assets, because they have no plan. It's not getting better, it's getting worse. And based on where we're going right now, this is what they're projecting. My thinking and my thought process is this is only getting worse. This is what they're thinking it's going to be. This is before they add more promises to the pile, right? This is just what they're promising right now. But as they make future promises, this is only going to get worse. The largest components are Social Security and Medicare, which together accounts for over 84% of total unfunded liabilities. These programs operate as a pay-as-you-go basis. Today's workers fund to today's retirees. As the ratio of workers to retirees shrinks, the gap between revenue and obligations widen. Why unfunded liabilities matter. The official national debt of 39.93 trillion is often cited as the measure of America's fiscal health, but unfunded liabilities of 86.6 trillion dwarf that figure. If a private company used the same accounting, it would be required to report these obligations on its balance sheet. The federal government is not. The Social Security Administration and Center for Medicare and Medicaid Services published these annual trustees reports with 75-year actual projections. So this is going on 75 years. These reports estimate future benefit payments, future payroll tax revenue, and the net present value of the shortfall. The unfunded liability is the gap. So these are going out 75 years. So as of right now, they're projecting out 75 years. My guess, and I don't think I'm wrong, is that that's only going to get worse. So as we sit today in 2026 and they're projecting out to what? 2101?
Right.
That's what they see. So if we go in 15 years out, I would assume that as the debt gets worse, the projection gap is going to get worse. That should absolutely terrify people. That's the real conversation that we should be having that we don't have. We don't talk about that. Because as they print more money, what happens to the stock market? Stock market goes up. As we've covered in previous podcasts, 86% of those gains are experienced by roughly 10% of the population. The other 90% is fighting over the other 14.
What I think it is that even if like there's the person that's not investing in the stock market, I think they believe that somehow if like companies are doing better, that means the economy's doing better and that means they'll do better. I think that's the simplistic attitude, that way that people look at it. I think they just think that somehow like, you know, they'll be making more money, so the taxes will go up, and then everybody will get better jobs because, like, for the tariffs, back to the tariffs, like, well, if like Ford decides to only make their cars in the United States and close all their plants in Mexico and Canada because of the tariffs, then I'm going to get a job working, at a plant, and I'm going to be like the old the old guys that worked at Ford that made a lot of money. And I think there's like a mentality that somehow, it still goes back to, I guess, that trickle down concept that we were introduced to in the 80s when I was in high school by Reagan, that if the economy's super good, it's going to trickle down and you'll be good. And I think a lot of people still are living on that, on hopes and dreams.
Key drivers: aging population, 10,000 baby boomers each reach retirement age that's a crazy stat. I've heard that before. 10,000 baby boomers are retiring every single day. Healthcare costs. Medical inflation consistently outpaces general CPI. When they do that CPI shit and they tell you about inflation, very rarely do we hear about the medical inflation costs. Like, shit keeps getting more and more expensive at the doctor's office. Shit gets more and more expensive when you have to enter the medical realm. Declining worker to retiree ratio from 5 to 1 in 1960 to 2.81 today. Expanded benefits. Medicare Part D 2026 and ACA provisions, which is around 2010, added trillions in projected costs. 2033. This is a very key important date that definitely doesn't get covered enough. Social Security's unfunded liability of approximately $24.9 trillion represents the gap between promised benefits and projected payroll tax revenue over the next 75 years. The Social Security Trust Fund is projected to be depleted by 2033. What's that, 7 years?
Yep.
I mean, that's rapidly approaching, at which point beneficiaries could face automatic benefit cuts of approximately 21%. Think about that for 1 second. Let's pretend that it's not 2026, it's 2023 right now. And the rising cost of goods and services that we've been talking about, the complaints of people that are on fixed income saying, hey, 5-6 years ago, my groceries cost this much, today cost that much. My healthcare cost this much, today cost this much more. My money is like stretched so thin. And they're getting their normal cost of living raised, which is still not helping all those problems. Now let's pretend that instead of getting the cost of living of whatever percent that is, they're getting cut by 21%. So every $1,000 you're going to get from Social Security, now you're getting $210 less. Now you got to make that work. So for all the issues that we're having up to this point right now, Rich, of the rising cost of goods and services and people on fixed incomes experiencing that, at 2033, we're going to have that problem. Fast forward 7 years. And then if we don't do anything, which look at our Congress right now, and they can't agree on shit. They don't come to agreement on anything. So the odds of them making any sort of provisions before 2033 are extremely low, in my opinion. So if they don't do anything, 21% is going to be cut off of people's Social Security benefits. So I peeped it real quick when we were on that page. Around 37 million people are living at the poverty line in the United States currently. What's that number going to be at when you cut 21% out of Social Security? What are we careening towards?
I mean, that's why, there are probably some people that are very nervous about Social Security that are older than me. I mean, I'm going to be 60. And, I'll start collecting and, it relatively soon. And,
I mean, you're not too far away from 2033.
That's my point. And it's funny because my wife and I have had conversations about Social Security and I said, well, you realize like it's not going to be, first of all, luckily I'm in a fiscal situation where Social Security will help me, but it's not like I need it. Let's put it that way. But most people do. Most people need it to cover the cost of inflation, of things that, their pension used to give them or whatever. And then there's a lot of people who don't have those things. So they're going to continue to work because they're not going to be able to, they're probably going to go back to work and stop collecting Social Security and or defer it or structure it differently because they'll just have to. And I think they're going to have to change the age. I'm surprised they haven't by now, to be honest. Just out of necessity. And just also practicality that most people are living longer. They're not retiring when they were in before anyway for various reasons. So yeah, I wouldn't be surprised. That's the only thing that'll probably end up happening that they'll have to agree on is the change in the age. And they'll do it as like, in a grandfathering thing.
75?
They'll slide it.
Where are they going to put it?
It won't go to 75 right away.
It's going to go. I think that's where it's going.
It will go to 75, but it won't go 75 in, like during that guy's term, whoever the president is. It's going to be like 5 years. Next year, it's going to go to 60, whatever, and then 60, whatever, then 71, then 73, then 75. It's like the reverse of the way your wages do.
They have to remember too that the electorate that's going to be responsible for showing up at the polls are going to be affected if they change it. Like, let's say like my generation. Okay, I'm 48 years old. Let's say, in 2033, that's 7 years from now, I'm going to be 55, right? So are they going to push it out to 75 on me? Or are they going to push it out to 75 on the younger generation that's still got a ways to go? Like anybody born, because if you do it to my generation, that's going to piss off, people expecting to start collecting at 62 or 66 or whatever age that they're going to do it. And now they got to wait an extra decade to touch their money. They're going to feel some type of way. But then here's the issue. If they don't do that, are they really doing anything to address the problem? Because you can't do both.
What they're going to do is they're going to lipstick on a pig. They're going to try to address it. And to answer your question, no, I don't think you'll see 75 at the age when you can start it. I think they'll push it out for like maybe someone who's going to be 55 and 33. They'll say, well, we're moving it to 70. Like, how now it's 62 or 66, it'll be like 66 or 70. So what they'll do is they'll get everybody.
The earliest you can do it is that, yeah.
Yeah. And then there'll be more penalties. So they'll make it feel like you're getting it at 66, but you're getting less. Like that's what I think. And then what they'll do is they'll push it off on like my kids. So my kids are, will be 30, we'll be hitting 30 by then. And they'll be like, and I've told my kids for a while and all their friends, listen, you guys have been working to 70, 75 anyway, because of Social Security, let alone that there's no pensions and stuff anymore.
They're only talking. I've never heard anything. I mean, 7 years is 2033, 7 years away. That's less than a decade. I've been hearing about 2033 for about 15 years.
For sure.
I've been hearing about 2033 being thrown out there in the early 2010s. Here we are 7 years away. What my question is, when they like, what happens beyond, if they're going to cut 21%, if they don't do anything in 2033, what happens in 2040?
Right.
Because it's not going to be enough to cut 21% off and they're really going to do anything. Like, there's such a big gap that they're going to have to do something else after that again. They're going to have to cut more, right? I mean,
Right.
I mean, the math doesn't math. That's I mean, this isn't getting enough airtime because, you know, we're going to be in 27 in 4 months. So we're talking like 6 years. We're talking like the next president potentially in their term is going to have to address this if they get a second term. Like, this is going to be a serious platform and a serious issue for whoever is in power at that point. And I don't see any legitimate, this isn't something they're going to be able to address like last minute. This isn't like a debt ceiling thing where they're just going to like you said lipstick over a pig. I don't know if this is something they're going to really be able to lipstick over a pig. There's going to be serious dissenting opinions on this. And I don't know. I don't know, man.
I just Googled it. I said, what percentage of, you know, people believe Social Security benefits are going to be running out of money? And 3/4 of the population are worried about it. 75, just about 75%. They're worried that we'll run out of money in their lifetime. So I think people are already probably more worried about it. They probably don't realize that it's 2033. And if, like, again, it's kind of like, to some extent, if you're 30 years old, you're not even worried about Social Security because you got so many other issues that you're dealing with. You can't afford a home, your college loans, your car loans. I think Social Security, they're like, I think if people under 40, they probably don't think they're ever getting Social Security. They're not even thinking it's going to be a thing. I think they figure it's just running out and it's just going to be gone.
It
like
legitimately
it will be a
might.
thing that we used to have. We don't have it.
It legitimately might. It legitimately might. Yeah. Another video. We got a video heavy podcast today. Jeff Ross, dynamite clip, 1:07. Let's play some Jeff Ross and then talk about that.
Why do you need an asset in the first place? Have you ever thought about it?
No.
To think deeply about it. The very necessity of an asset is because you know money loses value. And you're trying to park your money in assets tethered to the same system where money loses value, trying to hold your value of your money. So the very reason, the idea of an asset only exists because you can't store your money in money. Because you know governments and other people will cheat. The very idea of an asset. And so everybody collects assets inside the same system that's getting worse and worse and worse, whether those assets be housing, whether those assets be gold, and as those assets get centralized and more of the wealth accrues to the assets, because the assets aren't going up, the money's going down, right? Then those assets come under seizure of the same government.
So that's a paradoxical thought experiment that I thought was like, when I saw this earlier, I'm like, I know it because I'm a Bitcoiner, and I don't think I've articulated it enough, but like, spot on. The only reason why assets exist is because you can't store your money in money. Like, you can't hold on to money because it's melting. It's like you don't keep ice cubes outside of the freezer because you know that they melt. You put them in the freezer so they don't melt, right? But you're using you're taking your money out of the assets back in the same system that melts the ice cubes. So it's just this big circle. Like, you're stuck in this system that he said, government that cheats. They're cheating. That's why your money is losing value. So it's like a game of hot potato. Like, how long do I hold on to the money before I have to put into another asset? So you hold an asset so you can hope that it outpaces the system, and then you sell it, but then you have to put it, you can't just hold it in cash. You have to get it into another asset. So, like, how good are you at playing this game of hot potato? Because if you hold the hot potato too long, what happens? You lose the game. It's crazy when you think about that. Like, you're holding money in assets because you can't hold value in money, even though you're pricing it in the same money that's broken and doesn't hold value. What are your thoughts on that, Rich?
That's a really interesting point, because like it's like occasionally you'll see people say, well, I don't like invest my money because the stock market, like, I could lose it, and inflation is outpacing it anyway, and like that kind of mindset. So they just kind of like, I just have it in something else. I buy real estate, or I buy this, because they're trying to find something else, because you can't just put the money in the bank and let the money do its own thing. You need to find an artificial thing. That is pretty smart. Like, I never thought of it that way. I never heard it articulated like that. I
mean,
guess.
that's literally the ethos of Bitcoin. That's like all, when you just peel everything away, and even if you're a gold and silver guy, like that's like where we both, gold, silver, and Bitcoin people, like meet up. Like, we understand that. And even to some extent, people that invest in index funds and stock, like you're looking, or real estate, whatever asset you think is the best. Like, we all know that, like, putting money in a shoebox or even putting it in the bank, that's not it. That's not what you're doing. You're putting it in assets because you recognize that the money's broke. You may not advertise it like we do as Bitcoiners, or me on this podcast, like run around saying the money is broken. You may not articulate that, but your actions are showing that you kind of sort of understand that. You're not holding on to money. You're putting it in assets to try to outpace the money and not hold on to that money too long. And then when you do hold it, you buy something and you put it back in assets again. But it's like a big game of hot potato.
Right.
Because the system's broken and the government's going to cheat. Like, it's crazy. Like, but that's really what we're doing here. Like, it's yeah, man. Yeah. Here's another quick quick one. Sorry. Real time. This is another one that kind of like encompasses like talking about fiat and the fiat games as well.
Of just aligned, go get mine is the fiat game. When in fact, right, everybody has the option of just aligning to the future now. And over a longer time horizon, that is what compounds, right? If we really break this down, you could earn more, gotta get mine. You could earn more fiat tokens in a shorter time horizon, but you miss out on the compounding effects of occupying the future state sooner. So it's essentially a way to cheat yourself in the long run, which is all of what fiat is, right? Yeah, gotta get mine is the fiat.
Yep, fiat games, gotta get mine. The last bit of news that we'll talk about here, because it's news, it's crypto space, Bitcoin space. The Clarity Act still has not been voted on yet officially. They got till they come back in September to actually bring it forth for a vote. Otherwise, we're not going to see that happen in 2026. CNBC just reported the big banks are actively trying to sabotage the Bitcoin and Crypto Clarity Act. I don't like calling it the Bitcoin Clarity Act. It's the Crypto Clarity Act. It's not a Bitcoin Clarity Act. The banking lobby is right at this minute trying to trade favors to block the vote. They are calling the bill a genuine threat to their business. Banks are now openly scared of crypto competition. They want to hold back America to enrich themselves. They must not succeed. Again, I'll reiterate what I've said before, and I'll say it again. The Clarity Act is a crypto act. It is more for the stable coins than it is for Bitcoin. Coinbase and the Geminis of the world are actively campaigning and lobbying for it because it'll mean more fiat profits for them. Bitcoin will survive and thrive regardless if the Clarity Act passes, gets voted on or not. Yes, it will result, if it passes, in a price pump for Bitcoin and all the rest of crypto momentarily in the short term, but long term, it really doesn't have a huge effect. The last article I want to share here is another. This is a gold guy, and again, this goes back to us all. We should all be on the same page, and we're just not. But this is a gold guy talking about his thoughts on Bitcoin going to zero.
My personal opinion on Bitcoin is that it's going to go to zero.
Wow.
That's my personal.
Tell us more.
My personal opinion.
Wow.
Yeah.
Ouch.
It's
Tell me
not
more.
because it's an anti-gold thing. I think if you have gold in your portfolio, you should have Bitcoin, and vice versa. If you have Bitcoin in your portfolio, you should have gold. I think it's because it's a you've noticed in most of the crises that Bitcoin is a very correlated with risk assets in general. My personal.
And the guy that posted this, he put breaking: the CEO of the gold lobby says Bitcoin is going to zero. Water is wet. His own words. Just my personal opinion. Just instinct as a trader. No model, no data. Asked what would change his mind, he said he doesn't know if anything would. That's not a forecast. That's a mood. Ask the obvious question. Who signs his paycheck? The World Gold Council exists to sell you gold. He still tells you to hold, though. Both, though. You don't hedge with something you actually believe is worthless. Spot Bitcoin ETFs hold roughly 1.27 million Bitcoin. Public companies hold over 1.26 Bitcoin in treasuries. Supply capped at 21 million forever. Going to zero has been the call since 2010. Every one of them has been wrong for 15 straight years. 16, math. Gold can win. Bitcoin can win. They were never enemies. Calling one worthless because you sell the other isn't analysis. It's a sales pitch with a nice suit on. And, you know, it's been the same story for 17 years. The gold guys feel threatened by Bitcoin because Bitcoin is a better version of gold. It is gold 2.0. It doesn't mean that holding gold is bad. It doesn't mean that gold is worthless because Bitcoin is new and is better. It just means it's better. You can still hold gold. You can still hold silver. I actually hold some gold and silver still, even though I predominantly hold Bitcoin. But, you know, trashing Bitcoin because gold exists or or silver exists or some other asset exists is just terrible. Like, these guys, they're obviously paid shills. Like, anybody with a logical brain that invests would not call something worthless or say something's going to zero that's worth $65,000 or $64,000. Like, it's crazy to say that, you know, some property that you dislike in a bad neighborhood is worth nothing when the market values it at hundreds of thousands of dollars or even millions of dollars is just reckless. It's opinion. It's not fact. Markets set fact. Opinions are just that. Everyone has one. That's kind of where we'll land the plane for today. We'll end it slightly early. You know, lots of thoughts. If you like the content, please like, subscribe, share, all that kind of stuff. There's a lot of shitty content out there. Maybe you think this content is shitty. I don't know, but I will definitely tell you that we are at a point in time in the Bitcoin content space where there's just a lot of garbage. There's a lot of arguing. There's a lot of misinformation. There's a lot of people telling you how you should think and how you should view things. I'm telling you how I think. I'm telling you how I view things. And I'll say to every person out there who owns Bitcoin, do what you want, do what you wish. Bitcoin is what it is to you, and it is what it is to me. But at the end of the day, don't trust, verify. Thanks for watching. See you guys later. Peace.